Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Looking at the Australian dollar, the upward momentum wasn't as strong as previously seen from the bullish cavalry, and as the bearish sentiment returns after the RBA released the minutes of its meeting, which was held earlier this month. Since the release, the Australian dollar pair price action has suffered a round of losses and is now holding above the crucial level at 62.6065, with the low posted so far of 62.81. In the meeting, the members voted to leave interest rates unchanged at 0.25%. This was mostly because the bankers already intervened in the market several times in March. Looking at the technicals though, any advances should fail, and as we can see here from the broad downtrend here, right across here holds around 64.40-45. Other than that is that we do have the 60-day simple moving average, which is also around that level of 60.40-45. Resistance is seen around 63.45 and firmer as we climb towards this level. If we see a break of 62.60, then my target is viewed towards the region of 58.40-60, with the technicals breaking down is in favour of seeing the bears come back to the Aussie currency and push lower. Looking at the euro, little to report other than the fact is that the dollar index, which measures the greenback strength against a basket of 6 major currencies, has broken above the 100 level and therefore has put a little bit more pressure to the euro. As you can see from the technicals, we're nearly married up with the RSI and MACD, and therefore the short-term target is seen around 108.25 and lower, after testing there this morning to 107.35 before viewing as a potential short-term base. Little to add also to the dollar yen, but the bears are still evident, and I still feel that we will see a break eventually of 106.60 and therefore look towards a region of 105. Any advances should still be contained by the level around 108.25, as the market is now breaking down further, as you can see from the price action this morning. The pound is getting a little bit closer to the level of 123.70. If we break this level, then it reopens the downside to 121.60-70 and reassess. Dollar CAD, well, because of the oil break to the downside, the bulls have returned, but I'll be a little bit careful you don't get a bull trap above the level of 142. If so, then I do expect to see a rejection. Keep very close to stop loss, because if the weakness to oil continues, then we may see a little squeeze coming out of dollar CAD. Well, since the break of the trend on gold at 1,686, here's the fact there's been no follow-through. To some respect, it's actually holding up quite well. But from a technical point, there's no trend, and the MACD and RSI still remain quite negative. So therefore, do be on your guard that we could still see a challenge to the downside, which was respected overnight at 1,670, and the base coming in round about 1,640. To reinstate the upside, I would like to see a move through 1,710 to 12, which would reignite the move up to 1,750. Well, as you can see, oil took a very hard hit overnight, and now getting closer and respecting the level of $20 a barrel. As long as we maintain above that level, then I do expect to see a recovery. But if we see a break of $20, then I'm neutral for the short term and wait for better opportunities. The market is still very heavy, and due to the last 24-hour price action, it does give a little bit of concern, especially to the technicals, as it started to show a trend on the ADX, and the MACD is also looking a little bit to the negative side. But not turning bearish, and not turning with my view until we see a break of $20 a barrel, which is unlikely at this stage. Well, that wraps it for today. Thank you very much for joining me, and as always, look out for the intraday report, and I hope you enjoy the rest of the day.